Okay, let's dive into this. What if a company you probably use, well, almost daily, is right now sort of quietly rebuilding the entire financial system, right under our noses almost? Today we're doing a deep dive into how Stripe is, maybe unexpectedly, becoming a really crucial player in the world of crypto. And our main source here is a great article called How Stripe Quietly Became One of Crypto's Most Important Companies. So our mission today really is to unpack how Stripe's recent moves aren't just, adding a few crypto buttons. It seems more like they're building this crypto-native financial operating system, a system that could really change how money moves around the globe.
Yeah, and what's really fascinating here, I think, is how they're looking at crypto. While a lot of people might just see the price charts, the meme coins, that kind of thing, Stripe seems to view it fundamentally as infrastructure. It's a plumbing play. And these recent acquisitions they've made, they're not just like another random bet on crypto. It feels like a very clear signal that these big fintech players are genuinely preparing to maybe sidestep the traditional banking system altogether.
Sidestep. So when we say they're becoming crucial, it sounds like it's less about just, accepting Bitcoin for payments, and much more about a fundamental shift in the background. The article flags those acquisitions, right, Bridge and Privy, as being key to this strategy. Is the real idea here about building a system that actually works around some of those traditional financial gatekeepers?
Oh, absolutely. And it really starts with how they view those acquisitions strategically. Take Privy, for instance. Most people probably see, a wallet provider. But Stripe apparently saw a regulatory unlock, that's a telling phrase, by putting Privy's non-custodial wallet tech together with Bridge, which handles the compliant stablecoin ins and outs in, over 100 countries?
Wow.
They're basically building this modular financial stack, and it very cleverly navigates around the old constraints of traditional banking. So for the user, or the developer, I guess, it means maybe no need for sponsor banks, no dealing with custodial risk directly. And critically, Stripe itself isn't the one holding the customer funds in this model. It's all about delivering programmable, borderless finance, but through simple APIs. It's a fundamental rethink of how money actually moves.
Okay, so if I'm thinking about what that actually means practically, does this imply that, any app could essentially become a fintech product almost overnight? Like, could a marketplace just spin up user wallets without getting bogged down in all the custody regulations?
It seems to be the idea.
Or, think about gig platforms holding balances for workers across borders. Could this infrastructure handle that smoothly? It sounds like maybe even startups in, say, emerging markets could offer dollar accounts without needing a specific U.S. banking partner. Is that the kind of friction they're trying to remove, that global settlement piece?
Exactly. That's precisely the vision. It goes way beyond just being tools for developers. Stripe seems to be genuinely positioning itself to be the backbone for a whole new global financial setup, one that doesn't fundamentally rely on banks or the old card networks or even, many of the traditional compliance intermediaries. This isn't just enabling crypto payments. It feels like a systemic shift. It's disintermediating traditional finance right out of the payment flow itself. I mean, if legacy banks really grasped the full scope of what Stripe is building here, they wouldn't see it as just some side experiment. They'd probably see it as, an existential challenge.
And what makes this so potent, or maybe, dangerous, as the article puts it? It isn't just the clever tech, right? It's their unbelievable existing reach, their distribution.
Right, that's key.
I mean, Stripe already powers payments for millions, literally millions of businesses globally. They processed, over $1.4 trillion in total payment volume in 2024.
Yeah, 1.4 trillion. It's a mind-boggling number.
It really is.
Yeah.
Now, imagine them layering these stablecoin rails, this non-custodial wallet infrastructure, directly into that massive established system. It's like upgrading the plumbing in a giant skyscraper while everyone else is still arguing about whether they need indoor plumbing in the first place.
Yeah, good analogy.
They're not starting from zero. They're actually transforming the internet's kind of default payment layer into a gateway for on-chain finance.
And this ties into what the article calls their regulatory mastery, which I thought was a really interesting term. By leaning so heavily into non-custodial wallets, Stripe neatly sidesteps a lot of the really burdensome licensing requirements, the ones that have historically slowed down fintechs trying to manage user funds directly. Then you combine that with Bridge's ability to provide compliant on- and off-ramps, again, in over 100 countries. And what you end up with is this modular financial stack that, it very cleverly navigates the existing regulatory landscape. It's not really about defying the rules. It seems more about engineering solutions that function within the existing frameworks, but very much on their own terms.
So that level of strategic design, it really unlocks use cases that were just, well, incredibly difficult or practically impossible before.
Yeah, definitely.
We're talking about platforms potentially offering, say, stablecoin accounts without needing to become a full-blown bank, or merchants in emerging markets being able to settle transactions in dollars without ever dealing with a slow, expensive wire transfer.
Hmm.
Imagine payroll companies paying freelancers instantly, anywhere in the world, without the usual headaches of foreign exchange risk and delays.
Yeah, the cross-border piece is huge.
And the data seems to back this up too. The article mentions Chainalysis data showing that year over year, the growth in stablecoin transfers is actually strongest in real retail and professional transactions, particularly in places like sub-Saharan Africa and Latin America.
Right, real-world usage, not just speculation.
Exactly. It's pretty striking when you think that what used to take maybe months of compliance work in setting up banking relationships could now, theoretically, be done with just, a few lines of code through Stripe's APIs. That's transformative.
And if we sort of zoom out and connect this to the bigger picture, this isn't really just about Stripe, is it? It feels like it reflects this much broader shift where value is starting to move almost as freely as data moves online. And this raises a pretty important question, I think, for you listening. In this kind of emerging world where the financial layer, the plumbing, maybe doesn't rely so heavily on traditional banks or those legacy payment networks, what kind of new possibilities does that open up for you, whether you're, building a business or engaging with global markets or maybe just trying to understand how money really flows in this new era?
So wrapping this up,
Yeah.
what does it all really mean? We've seen how Stripe is, very strategically positioning itself. They seem to want to be the backbone of a new global financial system. That's a big claim.
It is.
And it's a system explicitly designed to disintermediate, to work around traditional banks and the old networks. They're basically treating crypto like new plumbing, making it usable, making it kind of invisible, and making it programmable. All supercharged, of course, by that incredible existing payment volume, that $1.4 trillion figure from 2024.
Just can't forget that scale.
Definitely not. And their sophisticated approach to regulation, designing around the rules, not just trying to avoid them, that really feels like a new standard. They don't seem to be chasing quick crypto hype. They look like they're building foundational pieces for what might be a powerful financial shift down the road. It's pretty remarkable, actually, to think about the future of global finance being shaped so fundamentally by these kinds of infrastructure plays happening almost beneath.